All right, guys, back at ya. Let's jump into Misty and MSTR. Okay, so Misty didn't do as bad as some of the techs, but Misty was down 2.19 and we were down 1.49 in Misty. Okay, so no new shares. Oh, sorry, we did get 50,000 shares, but no new trades. So Tesla and Misty, and I think Coney added some and didn't, and they added like 1,000,001, but the day before, I think they'd sold 2 or 300,000. You don't see that often where people cash out. So you had 1,357,000 added, and that's on the share count going up 50,000 shares. So since they didn't put trades on, let's go in and talk about where they are on the weeklies, the synthetics, etc. So what we've got, let's make sure that's done. 62. Yep, I'm on it with that. All right. So we can see here that we're all in one situation. The bad news here, if you recall, when we got severely capped, they went in and bought those back, closed it out, and I think it was on Wednesday, it could have been Tuesday, and they decided not to go out for the week. They wanted to go, the tail end of the week. They wanted, and I think it was Wednesday when it happened. Um, then they went all the way to 726. So otherwise, if that's at a day to go, this is pretty much a slam dunk. Based on the pre-market, we're down a little bit. And what am I seeing? 63,940. We're up 250. Okay, almost 64,000. And Misty in the pre-market is down. But remember, this is, 3 hour early pre-market, 4 hours. So it's very thin. It's anywhere between, 28 and 28.45. So it should be up a little bit. So it's not really relevant for Misty. So the point is, we're 7.71, no laddering, no nothing else. Now, what should happen is that's the bulk. And so I don't believe let's see what else is left on the holdings to tell us. That will be a clue. Yeah. So we still, no, those are all 726 expirations. So I don't know why that one is a weekly call and it's got the synthetic uh, expiration on it. And then the synthetics have, yeah, so I must have copied or done something kind of crazy. This should be, I think, 816 here. It happens, peeps. You do the wrong thing, especially when I'm doing like 7 funds. So I build it when I build a brand new one. I go copy a sheet from another one and then update all the data and just kind of use the format. So our synthetics are losing value, right? Whenever we go down, look at yesterday, we had almost 29 million of value in the synthetic. Now we have 3 million, right? So it went from, but that just shows you it doesn't take a big move on the synthetic side on these big volumes. It doesn't either in the calls when they go upside down on you, right? So where do we close in terms of our value? Well, we close at 27.91 and fair value is saying 27.86. And the share count, as I mentioned, was up 50,000. That's puny, right? 0.35 of 1%. But you see here on these charts, and if you're noticing, I'm doing this on every one. I want them to be very visible, very easy to see and read. Again, sometimes we're going to roll and then we only have one day in the new one, so I might as well wipe the other columns. But when I have four consistent days, but you can see here, like I didn't go in and update the date, right? But you can know that all I do is drag the values over. So we're talking about consecutive trading days, right? For these guys. All right, I'll worry about that later. But I find the visual, if I didn't understand it all, I can at least see it, right? And I'm a very visual person. So, how'd we do on our capture? Well, we've captured 12% considering, remember yesterday, I think we were behind 11%. So that's progressing in the right area because this thing's up at 1675 and we're down at 1555, right? So, but our synthetic is falling. That's never great. You know, you kind of win on both. The only way you can win on both is you don't move far enough to run past your weekly, but you do move up some. So now your synthetic is adding value and you're still winning on the weekly. So that's why we say the perfect mode is, and it's never going to, correspond that way. You get a 3, 4, 5% run up. It depends on the stock. On some of these, they're not even writing 5% out. They're writing 2 or 3 or 4% in a week. But in some of the cryptos, they're writing 7. But when the stock runs 15, you get killed. Remember, they're trying to harvest yield. So they're figuring out where they can harvest a yield, how far out they go. Otherwise, they could write them way out and almost be impossible to get capped on the weekly, but they'd be collecting pennies. So you'd start getting a monthly, dividend check for 15 cents instead of $1.30, and everybody'd be like, oh man. So high risk, high reward, which is another video I'm working on. I really want to nail this down because I'm finding that you guys are getting spoiled, and I'm just talking about general, right? I remember when I was into Misty for the first 3 or 4 months, I was like, oh my gosh, I bought this thing at, $20 and change, and it's, 30 something. And I've gotten this $4 payment, I got a 250 payment. I was like, are you kidding me? Did I know that that wasn't sustainable? Absolutely. So when people like Warren Buffett and when other people talk about 8%, 10%, and 12%, guys, don't fool yourself into thinking you're just going to buy a Yieldmax fund and you're going to get 100% yield and that's what you're going to get every year. It's not going to happen. There'll be periods of time not without NAV reduction. You may get 100% yield, but people that ignore that and say, I don't worry about that, well, eventually you have to worry about that because when your stock goes from 20 to 8 and reverse splits, then on an $8 stock, getting a high yield means a lot lower yield than you're used to getting. So you may own it outright free, but what do you really own? You may own something that pays you a little bit. And I'm taking extreme examples, guys. Look, there's a lot of smart people out here. There's a lot of people that have investable capital and they understand that they're going to take the 100% yield when they can get it. And if you don't have NAV erosion, that's great. And even if you get some NAV erosion, if I get a 30% NAV erosion, I'm getting 100% yield and I'm getting 70%, I better thank my lucky stars. 70% yield is not something you can repeat year in, year out for 20 or 30 years. It's just not. That's why I always say to people that live back in the 79 period, right? When gold flew to the moon and 80, 81 and 1981 mortgage rates were 16 and 17, 18%. You could go out in a CD and park any amount of money for 30 years and get teenage yield, right? I mean, you get 15, 16, 17%. and think about having that kind of thing locked up for 30 years. That would have ran to 2010. But how does someone know that it isn't going to be worse? They really don't. But my risk reward video is going to address somewhat's real. Now, some of you are really smart. You go out, you'll get a FEPI, you'll get some SVOL, you'll get some other stuff, and you balance across a broad range. But if you go out and throw all of your capital in these high income funds and then you put margin on top of it, and you think you're going to get no NAV reduction and you're going to get 100% yield forever, no way. Just not going to happen. It's just not possible. Can you do really well? Absolutely. Take it while you can get it. I got nothing wrong with really smart people. And then they're actively managing on top of that. Beautiful, right? But I feel sorry for the people that are coming in and just assume this thing is forever and they go throw all their money at it and don't understand the risk. I mean, the underlying is a stock. What's the risk? Stock can go down. Okay, enough of my rant on that. Let me finish up here. Um, so we look good. At the end of the day, I still think Misty, I'm the main reason is I'm super, super bullish on BTC as a store of wealth, okay? A limited supply, digital gold, digital energy. There's a lot of things it represents, an irrefutable ledger, right? There's just so many things. A beyond secure security system. That doesn't say some exchange itself doesn't get hacked or how you store it, but the actual Bitcoin mechanism, okay, it has a long way to go. It's probably 20 years that it has to go to where it just becomes the digital medium of exchange, right? And countries aren't going to like it and they're going to want to have their CBDCs and lots of things. But I just think the technology is so cool and so far advanced. So that's why you can put up with this stuff and you can jump in here and own something like Misty on MSTR. But does that mean you shouldn't own some MSTR or a X, a 1X or a 2X that you can afford the share price? Absolutely, even though MSTR is going to get cheaper. All right, let's look at payouts. Doesn't look good right at the moment, right? It's down to 39 cents in total share income. That's a positive, not a negative, right? We want that number to be negative. Is this thing going to pay a dollar? Yeah, it's going to pay a dollar. But we got to do better. And I think we will. Honestly, we're 64,025 right now with BTC live trading coming to you Friday morning. So hang in there. Things will get better. Stay calm. Anything can happen in these markets, and likely it will. But own it. And just when you get stressed and the computer, you're looking at it and you turn it off, go outside, take a walk, hike, drink something, hydrate, do whatever you need to do to calm down and relax that works for you. So that's what I got for you. It's nothing magical. We still have a gain of 2 million on the synthetic. We'll get better. All it takes is a little up movement. We're positioned. All right, guys. Peace out. I'm not a financial advisor, not financial advice. See ya. Bye for now.